Welcome back to the trading desk. When we left, we were talking a little bit about inflation versus deflation. And I mean, obviously, the logical argument is inflation should be a problem. We've been printing money. Sure. Rates are really low. The economy is coming back to some degree. But as we saw with the bond prices, bond market saying no way.
In order to get inflation, that money has to get into circulation. And right now, they saved the banks, but the banks aren't lending it out. So it's actually not getting into circulation.
Correct.
So I mean, not only are they not lending for mortgages, but they're not lending for new small businesses. I mean, it is dry out there.
So what's the point of another rumored stimulus plan then?
If it would have to be targeted. Don't target it at Wall Street. Target it at Main Street. You know, and we were talking in the break about Goldman Sachs raised their ratings on the banks today. That's what's helping the market rally a little bit here. Prince Al Walid, who's the largest owner of Citigroup, is saying, "Government, sell your stake, get out, show the world that the banks are healthy and they don't need your support anymore." And we were talking, the government should start trading. I mean, they bought this stuff, cheap. November, March, cheap when they were desperate for capital. They provided the capital. Now it's worth, in some cases, many multiples of what the government paid. Sell it. And if you want to do another stimulus geared towards Main Street, you'll have the profits.
So therein lies the rub. Who's the buyer if they sell it? I'm curious.
Well, the market's rallying like crazy. People are actually, banks are up today. People want to.
But is the government filing a 13D, letting us know that they're ditching out? I mean, honestly, I don't know. I mean, how is this all working? How do they sell shares of General Motors, Citigroup, all these banks that they own pieces of now? I don't know. I don't know.
You could also take it as a bearish implication. It's like, well, the government's getting out of this massive stake, and what happens if there are no buyers? Then
exactly, and then what? Yeah, exactly. If there is no market for the security,
it would have to be the banks. I think some of the banks have already done this. Basically returning the money back to the government, the money that was lent. But that there is the problem now is they didn't necessarily take equity, but they had warrants and whatnot, and so the stocks are way above. That's where the profits come from, the strike prices on those warrants, and so the government could say, hey, pay us back the money, and we'll just keep the warrants as as a lottery
or something,
as a lottery ticket, and someday down the road, we'll do an offering or something. But at least pay back those loans that were made, back in the depths of the crash. And use that money for good. I mean, they're talking about another stimulus. So,
well, another stimulus. So you're talking. You've got all these. They're all stimuli out there. Whether it's the clunker program, which is done, and the latest numbers.
In September, car sales.
The car sales dropped off the face of the earth
again. To be expected.
I mean, are you going to do another clunker program? Are we going to change taxes? Are we going to go to a national tax? Get rid of the. There's a lot of things that could be.
I think a stimulus program, maybe at this point, it can't be like the last one. Obviously, it has to be targeted at individuals, but it has to be something more than just one shot in the arm. Right. Give something that is going to have a lasting impact. It's one thing to give an adrenaline shot, but as we're seeing right now, economy's kind of cresting. I mean, I don't even really think it got too high off the ground, but the fact of the matter is it's not sustainable.
Right.
And I really think another stimulus needs to be aimed at the real estate market. I mean, I think you have all this shadow inventory of homes that are bank-owned that aren't even on the market, and that's just a huge overhang on the economy in general right now.
But interesting, I mean, I think if they do provide that type of stimulus for the retail buyer, I mean, do you get a whole nother layer of possible people walking away because the buyers are going to come in at much lower than perceived markets still today. I think we all agree.
And you have people that are good credits just walking away from their homes because they know I'm 100,000 underwater.
Why?
Right. 200,000
underwater. Paying for an asset exactly that's not worth what it's supposedly worth. Right. So that's what I'm curious if that's what the thought is behind those that are thinking about these opportunities.
Sure.
Do they?
Well, that's why you need to. I mean. I don't think it's the right thing to do from an ideological perspective, but from a government, an economic perspective, you need to find a way to prop up those home prices.
Or make whole those people that are there.
Right. Yeah.
And maybe you say, hey, you've got a loan that's for $400,000, but the market's $300,000. We'll make that $100,000 go away.
Freddie and Fannie.
Again, I don't know how
Freddie
it works,
and Fannie own so many of these loans, and they're basically government owned. Basically, the government owns all these mortgages. They have a lot of potential to work with you and say, hey, we're going to forgive.
Well, I read 160% of all the loans that have originated in the last 8 months.
All been bought by.
Think about
160%.
Think about if Freddie and Fannie weren't taken over by the government and weren't there buying, basically supporting the mortgage market right now, it would be a nightmare. It would be really a nightmare.
No, it's absolutely true.
So. And you're starting to see Bank of America and some of these other guys getting into the mortgage origination. They're buying some some different, private entities that are out there.
Well, Wells Fargo's been in good shape, and I think they accounted for almost 30%
Yeah.
of the of mortgages originated so far this year.
Right.
So they're in there, but they're only loaning 30-year money, and 20%
Yeah, real
down.
stringent,
Conforming loans. So it's still restrictive.
Yeah. Well, we got to take another break, but when we come back, we're going to be speaking to a local Bend resident who was also a former Olympian. Stay tuned. You're watching The Trading Desk on COTV, Channel 11.